Hello everyone, welcome to my video trade recap and trade forward guidance for the week. Hope you all had a great last week, a great weekend, a great Sunday. Just gonna kind of go over what I usually do every Sunday, kind of looking forward, just kind of recapping the past week and looking forward for potential setups for plays in this week. Kind of going over a lot of instruments from equities to futures to options and options on futures, as well as some Forex. Yeah, not any kind of financial advice, so these are just plays I will be doing, but yeah, just kind of give you a deep dive into how I'm thinking. So looking back at the week, we had a pretty interesting kind of balancing week on the SPX, essentially S&P 500. We looked like we were going to try and overtake recent highs from August, but then we had a quad witching day on Friday, which kind of resulted in this kind of big, large volume sell-off here. I'm not super concerned about that quite yet. With the quad witching, a lot of this move can be mechanical since a lot of market makers have to just kind of fix their positions, a lot of options expiring. So that can cause some weirdness in the markets here. So I'm not looking to be bearish quite yet, although that is on the horizon as we are kind of looking at some of these plays here. So overall, I'm just kind of fairly neutral on S&P. I think we might move up this week and just kind of continue balancing like we have between, let's see, 4,400 and 4,500, somewhere between that. Any kind of divergence we can see and breakout from these lows could result in just kind of a longer term move down to 4,300 would be kind of some first targets. And yeah, in worst case bear scenario, 4,200 to test this 200-day moving average. But yeah, no warning flags so far. So last week, I was able to play a lot of bullish option plays on Costco, Pepsi, Microsoft. So great week overall. I don't really want to go into all those details so much, but still have options positions open on CVS. Kind of bought it around here at the break of this 20 MA here. So longer term, we have been in a downtrend with CVS. This has kind of been one of my stocks in my longer term portfolio that I saw have been hemorrhaging money. But I'm still confident in CVS. I think it's still a great company. I go there all the time, so this is just kind of a nice chance to buy more, dollar cost averaging. Still believe in the company longer term. But as far as short-term plays, I'm looking at this as a failed breakout look below of this important level we've reached here, where in June we reached these bottoms and rotated up. I think this must have been some earnings news. We spiked down, tried to break this level, broke back through. So just kind of shows me that the bears, although they did try, were unable to bring it down lower. So the ball is in the bulls' courts right now. So I'm looking at this as just a rotational play for the time being, not expecting any kind of breakout of longer term up quite yet. So I kind of bought some put credit spreads going into 76, looking for a rotation up here. Potentially could fail right here, and we just keep bouncing here for the foreseeable future until the market decides what it wants to do, especially with interest rate news coming up with FOMC this week. So yeah, just a long-term play. Again, not looking for a crazy bull run here, but just a rotation back up. So options play has been great for that. Another stock I've been eyeing is Ally Financial. As you may be well aware, we had a bit of a banking crisis the past year and some change, starting with SVB and that collapse there. And I think financials were a bit too overly beaten down hard. Also, expectations of recession, along with these bank failures, kind of really beat down a lot of the financials. So I think there's a lot of value that can be had in a lot of these banks. Ally is one of those ones that I think have been beaten down a bit too much. And from a technical standpoint, we can kind of see that we hit these bottoms here around 23. We try to break out. Might have been some profit taking going on here, and followed by a retest of this area. Bears couldn't get any lower, so therefore we had to move further up. Looking at this level of 29.30ish here as a significant level to beat. I believe that price wants to try and break that up. I have some options plays kind of going for the 32 level here if we can get down to it. But if we fail to, break above, say above these levels here, I will assume the selling will continue and we'll be closing out these positions. But I think overall, longer term, great play, strong dividends, good growth stocks. So one to keep in mind here. Looking at, I'm just going to skip down here to the 10 years. So the 10 years have been, as you may know, really beaten down as interest rates keep high. Nope, that is not correct. And sorry, I'm really bad at recording stuff, so it's my first time. Hopefully it'll get better in the future, but yeah, here we are. So yeah, as you can see, 10-year notes have been getting severely beaten down, and we have hit a low that we were at kind of pretty much at the same time last year, in October, these lows here. So couldn't rally above. We are breaking above, so yeah, bears drove us down this price. We got some kind of buy up and then a failure to kind of make some higher lows there. So yeah, now we are looking like we are going to test it in the upcoming future. I am kind of looking at this as a potential strong breakdown, so I will be looking to buy some called credit spreads, which is kind of a bearish play on this. There's a good chance that there will be a buy up, since a break of this significant level here would mean that equities would also be kind of coming down. So if I'm not necessarily expecting an overall bearish play for the overall market, this might be one I'm hesitant to kind of really stay in. If anything, I think the bears will try to drive it down, and if we are going to remain bullish on the market, then we're going to get a significant buy up. But I think it's still a good play for an attempt down here to around at least the 106 level. But yeah, longer term implications of the breaking down and staying down is pretty bearish in the overall market. So something to keep in mind. Next, we're kind of looking at some Forex, so specifically Euro futures, since I like to play the options on these, since I can limit risk and have a lot more leeway. If I can open it up. Okay. So yeah, as you may have known or not known, the yen has just been on a massive bear downturn, like over 8% loss against the dollar itself. And this is due to a lot of fundamental reasons. The yen interest rate is negative, while the U.S. interest rate's around 5%. Therefore, it's been a strong carry trade for favoring the U.S. dollar against and short selling the yen, as well as the BOJ, Bank of Japan, not interfering at all quite yet. Recently, this past week, they came out and announced that they will be intervening once the spot price gets to around 150. We are hovering right now around 147 with the yen against the dollar. So yeah, there's a lot of, I imagine a lot of people are looking at that 150 level and just kind of buying it preemptively. So yeah, we kind of reached these levels again around the same time last year, around these lows here, and then we had a just kind of huge move up, and then pretty much lost all those gains with this double top here. So yeah, I think there is a good chance that we could try to break this, but I think there's a stronger chance of possibly profit taking on the part of the bears, as well as a lot of front running, people knowing that we are getting closer to that 150 level, so they will be buying up the yen, selling the dollar, and as that dollar weakness across the board, since the dollar has had a massive rally this past year, so I'm sure there's going to be a bit of profit taking and some breathing that's going to be happening. So I'm expecting a little bounce here on the yen, but would be overly cautious since we are in a very strong downtrend. But yeah, we have strong support here that should hold for a bit, at least for a nice small swing to the upside. So yeah, options would be a great play. Options on futures, or find like an ETF that could do that. And then yeah, we're looking at the euro. So kind of a similar situation where we've been kind of more or less just kind of bouncing in this big zone between 106 and 112 with the euro. However, earlier this year, we had a breakout of this, multi-year kind of level that we've been kind of holding on. But a failure for the bulls to keep it above this level, so that is ultimately very bearish since we couldn't find the buyers to continue this bull run on the euro here. So yeah, ever since then we've just been kind of on a straight kind of downward path here for the euro. However, the ECB came out this week and said they have raised rates for the last time, so we have reached the apex of rate hikes for the euro. Ultimately, I'm not exactly sure what that's going to leave the euro, since the dollar is still pretty up in the air in terms of what the Fed will do, in terms of, are we going to get a pause? Are we going to keep setting rate hikes up? This past week with CPI and PPI has not been well for inflation. We are still ticking up, which is a sign that the Fed might raise rates, but at the expense of possibly putting the economy in a recession. Who knows? We could be in a recession now. However, I've noticed this large volume spike here, which kind of leads me to believe this might have been the bears' capitulation moment. And when that tends to happen, we have institutions, big money coming in and taking those contracts where those weak bulls had left them behind. So we're also at an important kind of supply zone here. So I'm also, with the yen, also expecting a little bit of a bounce up. I might hold off on the yen trade and just jump on this euro futures trade, since the euro hasn't been as strong of a downtrend, considering their interest rates are that higher up, and the yen has been a very strong carry trade. So we'll just keep monitoring and watching this. All right, let's see what I got here. All right, so gold has been a instrument in the past historically used for risk off kind of investing. So when the market's in turmoil, you see gold's going up. That hasn't really been the case for a while now. Historically, that has been, but I'm not sure if that correlation is still existing right now, and just the kind of weird kind of environment we're in. So I don't want to say anything as fact as that is going to still be considered a risk off, or I'm sorry, a risk on instrument. So yeah, what we have here is we are a bit of a balancing area. We're not necessarily in a down. I wouldn't call it a downtrend. We are still slowly moving up for the past. Let's see. Yeah, since last year we've kind of been on an uptrend. So we haven't been able to break highs, but that doesn't necessarily mean we are going down. We're kind of just bouncing in this zone here since, I guess, early this year, kind of between 2000 and 1900 would be a safe place to say we're balancing. We have this trend line here, and that's like a multi-year one, so I wouldn't, keep that in, since we've broken it and it's been playing around with it, and I don't like moving around trend lines, since it's whatever, because you can keep redrawing and justify anything any which way. However, I still am confident we will just keep continuing to bounce here. especially with FOMC coming up this week. I imagine we're going to get some volatility with gold, and we could see potential to move up to the balance area high, which is around 2,000 or anywhere between 1980 and 2,000. So easy options play to just buy some managed risk contracts, and yeah, hope we can get to the top here. Again, if we do spike up on gold, that could also be an indication that equities is in trouble. The market overall would be in trouble, since if we do keep this historic things of risk on, then yeah. So yeah, last commodity I will look at is wheat. I have not been doing too well with some wheat trades. I was cut the longs on this rally up. I got a little too greedy. Thought we would go to kind of closer to Russian Ukraine war highs of around 1,200. Maybe not even that far up, but we failed to do so. And this should have been my warning sign here, where we couldn't break this high. Should have sold. So I just kind of let my contracts go back down to break even. However, we have this pivotal support level here around 590, 580-ish area, where price has been aggressively bought at as soon as we hit it. You can see here, yeah, from May, bought up. August, we got bought up, but now we are testing it below. So we obviously have a bunch of liquidity stuck down here. So I'm sure I'm looking at this as some of a liquidity sweep, or stop run, as some of you may like to call it. So once we sweep that liquidity, I think we can potentially have momentum to kind of try and get towards these highs, if even the 200-day moving average, or even just some of these levels that we've historically been bouncing off of. So again, not expecting anything super bullish, but just a maybe rotation after balance to kind of see where the sellers start to really step in, or the buyers really kind of make their mark and try to push it up. But we'll see. Again, options are great for this, since you can still profit at any kind of environment. But yeah, so yeah, that is kind of my forecast for the week. I primarily trade ES features and just kind of dabble in swing trading other features long term. As for the ES, like I said earlier, I'm not really overly bearish. We are still in a channel uptrend. However, we got this big negative volume candle on Friday. Again, I don't put too much weight on it, considering it was a quad witching day, and so a lot of the selling could have just been mechanical, and we could just be completely buying up. But yeah, we couldn't get back into this balance area from before, so I will continue to still see as us balancing up until FOMC Wednesday. We might get that might be a catalyst for a larger move in either direction. So yeah, FOMC, I'm sure we're just going to be rotating there. No significant moves before then. So yeah, just kind of playing the balance between 4,500 and 45.60, I guess, would be a balance area I'm looking at. So yeah, hope y'all have a wonderful rest of your week. And yeah, I will hopefully be continuing these videos every Sunday. Thank you.